Hello traders, this is Mike with FXBattleground.com. I want to take some time and talk about trend lines today. We're looking at the pound yen weekly chart, and we noted in the weekly update on Sunday that this weekly chart has been controlled by this downtrend line for this probably close to a year, and that on the daily you can see that we are in the area of the downtrend line, something to be considered. We're also in the area of the 200 MA moving average moving down. This is something that people look at. This is an area, and you can see that the pound yen struggled with this area and then came off pretty heavily. So let's look at the 4-hour. Here's another trend line. Well, let's look at the 4-hour, how it puts in this pin bar and then moves below the 20, returns and sells off as it bounces right off the 20. And we move down into this area. We break a couple of pivots here, especially this pivot. This is the most recent pivot swing low. So we break that convincingly. We put in closes below it. So now we're below this battleground area. Previous support should become resistance. So we need to look for a retracement to that area to get short. We could do it on the 4-hour chart. We could also look on the 1-hour chart to try to get a finer entry. We have this battleground area drawn on the charts. Now we're also going to look to this area before it breaks down. This is where it bounced off the 20 on the 4-hour. And we're going to draw this trend line. And this is a trend line area, and that's to reinforce the idea that this is not to the pip. This is not a 10 pip range that we have to touch. This is an area. And if you get a confluence of areas, then you have a battleground area that you need to watch. So let's see this downtrend line. We know this battleground area is derived from the previous support, now resistance, a hard breakdown below that area, and a return once. Didn't quite make it in. This could have been playable, but then here again, when you get this rally up and you break this previous high and then see a rejection, this is like a fakie. You break up, it's a fakie, it gets slammed back down. This is closer to the trend line. The closer to this confluence area, the better. So this is one run that almost made it. This one definitely did make it. And this is an area that you want to be short when you see this pin bar print. You have a nice tight stop, especially for this pair, and you're in, and you have at least 1 R that you can bank here. You can move break even and hold for 2. So you're in without risk, at least on this trade, if you not take a quarter off, however your management plan decides. Now, if you are, this is the real target down here at this line. And if you do make it down here, I would highly suggest just take it all. Take the entire trade off. Take all the profits. This is 2.5 R's in this area. And let me explain why. You might say, well, I need to hold. I want to hold for bigger targets. Well, yeah, but what does your plan say? And here's why your plan should not try to hold through this area, especially a double bottom, because this is pretty heavy support now because it's bounced on this area twice. When you come to this area, just take it all, because you have an opportunity to put it all back on with much less risk and barely lose a thing. What happens if it does break through? You take it all and it keeps coming through and prints multiple bars down here. Well, not a big deal, because you probably will have a retracement back up into this area. Same area. You have the trend line coming down. It most likely will take a few bars to happen, and what you're looking for is it to come back up and happen in this area. To trade back up in this area of the bars, to put in your signal and give you a buy signal or short signal in this area, so that you have more confluence, another signal, and you're short in this area. You got out here short, you're back in here short. No net loss, but with a lot less risk, because you save yourself the risk of this bouncing from this area and losing all that profit, and you save yourself the risk, or you reduce your risk, because you see bars printing down here. And then anyone who was short from up here or short on the break, they're going to take their profits down in this area. Anti-trend scalpers, counter-trend scalpers are going to try to scalp. They're going to get long any life they see on a counter-trend rally. They're going to get long. Anyone that gets long on the counter-trend rally is going to they're going to sell up here and take their profits. So you have a lot of selling pressure that's going to return in this area. The longs from down here will sell. The people like us who are waiting for this retracement, they're going to be short. There's very few people who are going to try to get long and go long, a new long from right in this area, that have any sense at all with trading, unless they're maybe higher time frame people. But if you look at the higher time frames, this is not a great place to go long on a higher time frame. On the weekly, maybe, but you're still challenging, and you've had 4 weeks up and now a weekly sell signal. So it would take a lot of cojones to go long in this area. And so that's the kind of place you're looking for. You're looking for the kind of place where multiple traders are selling, and they're selling because they're getting in as a new short because of a retracement rally into a resistance area. They're selling because they're counter trend players that got long down here on the turn, and they know that they need to sell out when they come into this area. So here you got other sellers. You have all the longs who got long here and they got long there and they went to sleep, and then bam, it runs down right through their area. They're underwater. They're down. All they want to do is be made whole again. And when they come back up into this area, they know that this is their best chance, because if it rolls and heads back down, they're done for. So you have a lot of longs that are stuck in these bars that just want to sell as close to break even as they can get, and they know this is it. So you have sellers from 3 different groups that come into this area, and the only thing that could overwhelm that would be multiple buyers on higher time frames, and the odds are that that's not going to happen. So this is the place to short, just like this was the place to short. And that's how trends work. That's how bounces work. That's how stair-stepping works. That's how support and resistance work. And that's what we use to trade the markets with an edge. This is not a recommendation to trade. This is just education. This is Mike with FXBattleground.com.